for today's session over here. So what we're going to do for today, we'll be covering two aspects. For the starting part here, we'll do a very quick updates on the market. After that, we'll move into the questions that we have received. From there, we'll actually answer and discuss those questions that you guys have actually sent in as part of the coaching call. So let's dive straight in. So as of today, you can see here the expectation is a drop from 6.0% to 5.1%. So the actual data, when it's being released later, any huge deviation out of the expectation, whether is it going to be significantly higher than 5.1 or significantly lower than 5.1, we're going to expect some volatility in the dollar itself. So that's the primary one. Of course, after that at 10 p.m., we do have the Bank of Canada rate statement, but I don't think there will be much of a surprise from that. Last meeting, they did not increase rates. They have been stalling at 4.5. I don't think this time around they're going to have any difference. And then for the remaining part of the week, not really huge significance as compared to the CPI that we might see later on. So that's a quick one. So if we jump over to the charts over here, we'll talk about the dollar index first, okay? So right now I'm on the 4-hour scale, but of course, if you are interested in capturing the move later based on the CPI, what you want to do is you might want to go down to maybe on the lower scale to look for some opportunities that you may be able to capitalize on. Now, looking at the dollar index chart, bear in mind that what you're seeing here on the screen, okay, is actually a delayed feed, right? So you can see over here, data is delayed. Just have that in mind because especially if you're looking at news, right? This one here is actually slightly lagging, right? But most of the time we trade the majors, okay? So we'll talk a little bit about the dollar index first. So right now, if you ask me which would be the primary focus in terms of the direction, I would say still downside because we do have on the lower time frame, this is an impulse push. This may, of course, not develop fully like that because in about 30 minutes time, a significant news might come in and it might affect the market. So if you're interested in this, there's actually a way to trade it, which is trading the volatility of it, right? So you can actually put in, a high and a low. And right now the market is kind of in between it, which is pretty ideal. So when the news comes out, whether this is going to break up or down, if you're doing news trading, it doesn't really matter because what you're looking at is just capturing that short-term volatility, right? So dollar index does have that possibility of a potential trade where you can look to capitalize on the volatility that comes in if there's a huge deviation on actual news. Okay, but if you look at it from a higher time frame perspective, I'm not so keen on buying it because of the higher time frame structure. Looking at this here, we can still expect a little bit more downside, right? So that's my directional bias that I'm holding for the DXY itself. Of course, you might not directly trade the dollar index, so you may want to consider looking at some of the majors here for potential trade as well. Now, euro dollar, I'm maintaining a pretty neutral point of view because this bounce here for the past 2 days looks pretty impulsive. We can see it as a support from this trend line as of now. So there's no sell, but I wouldn't be interested to buy here because, buying it up may be a temporary short-term thing and this can still come back down eventually. That's why I'm actually not so keen on putting too much emphasis on the euro, at least for this week and going into maybe 8:30 news later, right? So this one here, I'm actually looking at giving it more time, see how the market is developed, then only maybe come back and see if we get a clearer setup and a clearer structure that we can look into. So euro dollar, personally here, I would say if you're looking at news trade, you may want to also be cautious on that. I don't think that's the best setup to be looking at a break. You can, of course, look at high and lows here, but the range may be a little bit too wide. You may want to then also go down maybe 15 minutes to look at something like that, right? So ideally, if you're looking at the breakout of news, right, we call this a straddle strategy. The range should ideally be somewhere between like 30 to 20 pips. So in this case here, you can see the low is around 1.0915. The top is about 1.0935 or 40. Which is quite good on a 15-minute scale, right? So this is something you can consider a break and a bottom. When you're doing this kind of trade straddle, you don't want to go for huge. You want to put your target too far, right? Because the objective and the principle behind this is just simply capturing a short-term trade. Okay, you're trading just that volatility from that news. So if let's say you look at a break here around 1.0915, your stop, let's say you put it above this level around 1.0935, right? So that's about 20 pips. What you want to do then is you just catch 20 pips and then that's it. Get out of that trade, take profit after 20 pips, 1:1 risk to reward, and that's it, done. That's all for news trade. So usually when you're doing this kind of short-term volatility trade, that's how you can approach it. So for me, at least from a swing trade point of view, euro dollar, I'm going to be patient. Pound dollar here may set up something interesting. We did get that break above this minor trend line, and we are seeing quite a bit of a decent correction right now. I think this is clearer on the lower scale. So we can't have this structure of an impulse, 1, 2, 3, right? So this one here, you can have the opportunity to combine a potential news trade follow through with a swing trade direction. Okay, so what I mean is we currently do have a very clear 1 impulse push and then 1, 2, 3 correction. So what you can do is you can look for a breakout, leveraging on the volatility of the news later on, right? We have a clear sense of direction that we focus only on the upside. So if the market just breaks down, no worries on that. We'll probably not trade this to the downside. We have a clear sense of direction, meaning we focus only on the upside, right? So we can select a mini high here if the price actually breaks through that with the news. And we can see that it's relatively impulsive and more importantly, clear off some levels that we may not consider to just take profit from there, but we may consider to hold on this trade for more upside, because if you then again go back to a higher time frame, we can follow through with this particular trade all the way back up towards maybe 1.2650, right? So this is something that you can also incorporate in using some important news catalysts as the kind of like fuel to push price in the particular direction that you want, and then you just hold on to it for the longer run, right? So you kind of combine a short-term volatility trade setup with a potential swing trade idea. So that's my view on the pound dollar. I think if you're more interested in the longer time frame kind of swing trade style, pound dollar may present a decent opportunity as compared to the euro. Aussie dollar over here as well, but this may be a little bit tricky because for me, I'm actually more interested if this bounces up a little bit more towards this area to look for a sell. But of course, understand that later we have a high impact news, right? Things can shift very quickly. If let's say the dollar weakens significantly and Aussie dollar just push up like that, I wouldn't be selling that immediately, right? Because then that would change the entire structure. Things might develop into more complex style. And I wouldn't want to sell into a strong momentum like this. So this is a little bit tricky. If you go down to the lower time frame, of course, you can also consider a break on that. For me, I'm quite strict in timing my entry, right? Because this one here, we kind of have a 1, 2, and then we don't really have the third move up yet. I wouldn't be too eager to sell it yet, right? Because I'm quite strict in waiting for a clear 3-wave structure before I enter a trade. But again, this is coming back to how aggressive you are, what is your trading plan, what is some of the things to consider before you pull the trigger. If you're just simply looking at news trade, I think this consolidation is pretty great as well, right? You can consider that straddle breakout technique. So that's on Aussie. Dollar Canadian over here, we had that break. So over here again, this is something that I may not just jump in because from this perspective, we only have like one set. Okay, so for me, I always like to see an obvious 3-wave, but does it need to happen? The answer is no, because this can be a completed 4-wave and then this can still come back down, right? So again, if I can see a clear 3-wave here, then that will be a setup for me. If there is no such thing, then again, I'll just be patient. But for news trade, I think dollar CAD is not doing a clear setup, right? We don't have a range that we can look for a straddle. This is too wide. So if you're looking at news trade, dollar Canadian may not be the best. If you're looking at swing trade, then you can pay attention a little bit to it, but I don't think the setup is going to come today anyway. Next, we have the dollar yen. Quick update over here. I'm still expecting this to drop correctively. If we can get that, I have a short-term buy. And then from there on, I'll be looking at the sell for an extended target to the downside, right? So the sell is more of a swing trade. The buy is more of an intraday kind of setup, shorter term. So we'll see how it goes. If let's say this just keeps going, and then we'll naturally not look at the buy already, but we'll just focus on the sell. So the news later coming in may give us more data, more information as to how we're going to plan ahead as well. So this one here, as of now, this is how we look at it. We'll see when the news comes out later on. And then we have gold. Okay, so gold over here right now seems like price is giving off a decent reaction around 618. This is a little bit of a V. Not the ideal and the best one here, but Now, the market is never perfect, right? So this one here is more of like a three-wave expectation. So we right now see this as 3 and 5 done. And therefore, this would be our ABC or a three-wave pullback potentially towards 1950. And from there, then we'll be looking for a buy. So short term, we're looking at this sell. All the best, and I'll see you guys again next week. So see you guys. Bye-bye.